All right, everyone, welcome back to the channel. Thank you for tuning in today. This is a remake of a video that I had posted earlier. I was having problems with the encoding process as well as the quality, so I just decided to do a remake and repost, okay? The title or the information contained in this video surrounds depicting the directional bias. So a lot of people have a hard time when it comes to using the higher time frame charts or higher base charts. Regardless if you trade time, tick, volume, you should always be using or looking out further, all right? You want to have a broader idea, all right, and looking out further on your charts to see what has the market been doing historically, because that's what we're trying to determine is based on historical movement, the possibilities of what price could be going, all right? But when it comes to directional bias, especially on a daily basis, we're trying to depict as scalpers which way we should be trading depending on the trend of the market. Is it moving to the upside or to the downside? And what I have in front of me is a chart of the ES futures. A lot of individuals or traders that are part of the Discord community, part of this channel, actually trade either the E-mini or the micro futures. That could be, I'm primarily talking about the indices, all right, or the indexes. It could be the NASDAQ 100, it could be the ES futures, it could be the Dow. But most of us trade the indices. If you trade any means of commodities or currencies and you're a futures trader, that's fine as well. But I just want to show you, because a lot of people, they have a hard time, like I said, trying to determine should they be trading short or going long. You have to always understand that the market can turn its direction and we can have a trend change or reversal of the market. I like to call it a tidal change, meaning where the tide may be moving to the upside and now we're moving to the downside. But it's all depending, it's all strictly based on when I'm looking for shift of the market. Did the market break structure to the downside? Structural breaks are a major component to the way I trade personally, okay? And I use multi-chart confluences, okay, as means of confirmation, meaning I like to look at my higher time frame or higher base charts and mark zones and then move down to a lower base chart, which is off of an entry chart, make my trades, okay? I do not trade from higher base charts. I'm not a swing or positional style trader. I strictly am a scalper, and I look for opportunities to scalp each and every day, all right? Now, I took, a trade scalping today off of the ES futures, all right? This was a great area of demand right here. If you could have caught this into the yesterday's trading session, I posted that over in the Discord and talked about that. But I'm going to show you at the end of this video here that a scalp that I did take on the ES a short bit ago. But anyways, let's move forward and talk about, looking at the structure of the market to be able to depict which way we should be trading, up or down, right? Long or short. If we look at the ES here, all we can see it has been doing is doing what? Ramping to the upside, making higher highs and higher lows. Again, structural breaks are important because at any given time, the market can shift direction, and then when we receive a structural break to the downside, and I covered this in a market structure video, how I basically determine what is my deciding factor when it comes to looking for, the shift in the market, okay? The market reversing. The way I look at it is in determining it is if we are breaking structure, meaning if we get a push lower, just for example here, we've been moving to the upside, right? And as long as we've been breaking structure to the upside, then my bias is always to the upside, okay? You hear me talk about that when I do kind of in my live recorded trading videos. I'm talking about directional bias, or when I go in to analyze the market before I get started looking for trades. I want to depict a bias, all right? So in this case here, we're moving to the upside. Now, there is a point at which I would start to look for opportunities to go short. Again, breaks of structure, especially off the higher base or higher time frame charts, are crucial. They're key to trading. Where we see this last push to the upside here, the market made a high, higher low, high, pull back here, retrace a little bit deeper, and then it made a high up here, okay? We broke structure right here. This was the last high, okay? I'm talking about, this is coming out of the latter part of December. And as you can see, the ES futures, even on the micros, hasn't really done much, even stepping into the new year. But just want to show you this as a guide or as a reference. You'll see this type of structure happen and unfold on different markets, okay? Now, the NASDAQ is more of a thinner market, so it's had a lot more movement than the ES. The ES is a very highly traded and volume thick market, okay? So we have a high right here, and then the market starts to break lower. When we get that initial push to the downside where it breaks through a major low right here or through a low, then that's what's classified as a structure break. We broke structure to the downside, okay? And then when we pull back and make a lower high and then a lower low, that ultimately is going to let me know that, yes, we are definitely looking, like we're going to start moving to the downside. But again, the market could just turn back around and start pushing higher, taking out some minor areas of structure, or what I like to call or classify as internal structure. And then we have a major area of structure right here. And that's what it did. It did push down. It broke structure right here. And then you have to ask yourself, okay, we got a structural break right here. It pulled back and then it pushed lower, as you can see right here. And then we have a pullback to a key area of supply. I've shown this in a couple of videos prior to. But again, we're just trying to talk about, forming a bias to let us know sentiment-wise which way we should be trading. This was a supply zone. You could have taken it on the pullback. I'm not saying take it off the higher base chart or higher time frame chart. This is where once it taps into a zone, we're traces to it. Then we look and talk about the strategy, the steps I take into the strategy, or look for things to unfold to allow me to take a trade off of my lower time frame 12 range chart. So if you're interested in watching some of those videos, then go back and watch some of the videos on the channel, as well as I have a video playlist that I put together for those that are part of the private community, which are elite channel members, elite channel supporters. If you're interested in joining, just click on the join button, and right there next to the share or download, somewhere in that general area, you'll see it, or you can find the link down in the description portion of the video. Click on it, and you can, it's $6.99 a month. What you receive is the trade breakdowns as well as the video playlist, which is a list of videos that I've hand selected because those are what I feel cover the core components of how I actually trade using the strategy and how I trade. So if you're interested in joining, again, it's $6.99 a month. That's all it is. All right, so this is the pullback supply. The market rejects this area, and then it's going to aim for the low down here, right, to fill in some of these imbalances. I talk about imbalances, gaps, fair value gaps, pretty much all the same in many videos, because imbalances are crucial to trading, especially when it comes to supply and demand. It should be crucial no matter what the strategy you trade. But okay, so the market comes down to this low right here, okay? And like I said, the tide can change in any given moment, and then it starts ramping back up to the upside, and we've been been bullish since then. So yeah, a little bit of, once we start breaking structure to the downside, a little bearish sentiment, we start thinking to look for shorts, but then it turns back around, takes out a major high here, pushing back to the upside, and then since it's been breaking structure, as long as we have structural breaks to the upside and the market is just trending higher and higher, the only thing you should be looking for, especially as a beginner trader and new trader, I talk about it, trade in the direction of the higher time frame. The trend is your friend, allow it to be your friend, and continue taking trades. So you're looking for pullbacks to key areas of supply and demand. I don't trade support and resistance, and I'm not a break and retest type trader. Supply and demand is the cornerstone, it's the bread and butter to how I trade in my own personal trading. So that's all I do, is look for pullbacks to key areas of supply and demand. So as long as it's breaking structure to the upside and trending, that's all I'm going to be doing, is looking for pullbacks to either just demand zones. If we're breaking structure to the downside, supply zones, pullbacks. So it's breaking structure here. We got a major structure break here, and then it pushes up, pulls back, breaks higher. As long as it's doing that, my sentiment, my bias is always going to be looking for longs to pullbacks at demand. Again, yesterday evening, towards the opening of yesterday's overnight session, this was a beautiful opportunity to take a short, but you would have had to weather it out because it kind of seesawed around throughout the night until we tapped into pretty much, I believe it was the London session, and then the market pushed higher. And I even put it out there on the Discord. I mentioned it early into the session this morning that, hey, it's going to go up there and test the 19 area, and it did just that. So if you were able to hold that position, put a nice stop on, maybe you'd have had to put a decent stop on, but you would have picked up every bit of that. So maybe you got in, you could have got in somewhere in this area here, but again, looking off of the lower time frame. But again, it runs all the way back up. So there's a possibility you could at least picked up 10 points off of the ES very, very, very easy. So just moving down to right now. So again, just look at use a higher time frame, a higher base chart. Look at the structure of the market. As long as it's breaking structure to the upside in the session, okay, then all we're doing is moving higher. We're trending in one direction, and you should just be looking for and have a bias of going long. All right, and just quickly going down to the lower time frame, my 12 range chart. Let's cover that right quick, because I did take a trade setup which was, what was that? 1 second. All right, so and this trade was inspired by the 24 range chart. So this was a demand zone resting right here. Now we did start folding down and start breaking structure back to the downside, but this is an untested area of demand. Inspired off of the 24 range chart, took it off on 12 range chart. So this was a demand zone resting in this area right here. It taps into it, and then looking to see where it could actually go to. Definitely, I positioned myself right here. I think it was at, I posted it over in the Discord community. So if you're part of the Discord, then you would have saw the trade that I posted. I got out at around, I think it was 49.08 and a half. I picked up 3.5 points right there. But it's probably gonna go up here and test right here, I'm sure, and fill in this gap or imbalance, resting back up to 18. So, you know, a nice trade, but you know, right now we are Eastern time, 3:42, approaching the close of the market. But and moving down to the 12 range chart, you can see it. We tapped into that area right here. So, you know, you wait for the rejection, the break of the close of the candle to the upside. You look over at your higher time frame to determine, what am I trying to say? Determine where the market can go to, because the trade was inspired off a 24-hour demand zone. So I'm looking at the structure, right? Not structure, but looking at price action, what took place right here, and looking at that, you know, I'm aiming for this area up here because all the imbalances right here were filled. Once we get the rejection here to the zone, I'm going to aim for the next area of imbalance to the upside here, which is at 18, and hopefully it goes up there, because so far it's already come to about 17. We're talking 4 ticks away, 1 point. All right. So, but the trade was inspired by the 24-hour, but taken off of the 12 range, and I posted over in the Discord. These are type things that I show, and as well as other traders too. We have plenty of traders that share their trades on a daily. Because we find, or I find, that it helps many individuals out. And we can, you know, if you got a question, we also explain the reasons why we took those trades, as lots of people do. So outside of that, if you're interested in joining the Discord, find the link down in the description portion of the video. And please, if you're not a current subscriber, take the time then go ahead and click on the sub button. Make sure to turn on all your post notifications. And last but not least, please drop a like on the video. But again, in this video, we're just talking about forming a directional bias. What is the sentiment? What should your sentiment be? And looking at how the market is moving. All right. I wish everyone a fantastic rest of your day, and I'll see you in the next video. Take care.